everyone, I'm still here in Las Vegas, but right now we need to talk about the markets, and more specifically, I want to talk a little bit about Apple, and I want to talk a little bit about potentially even Goldman Sachs. These are a couple of really hugely important stocks, as you know, and hopefully you have been following our YouTube channel here, kind of listening to what we talk about through the lens of a repeatable process. That bounce that we had in the second half, or the late October, early November, to me, it didn't seem sustainable. We talked about how the market rover also told us that, and in fact gave us sell signals. I'm going to revisit a sell signal that we talked about here in the video, I think a day or two ago, on ExxonMobil. That's working out very well. But let's talk about Apple for a minute. So what's happening with Apple is that we're getting decelerating growth headlines. We haven't had that in quite some time. We're seeing suppliers cut their outlook, or at least not up the outlook. And those are concerning signs. So the question is, what do you do here? Do you buy it? Do you sell it? Let me give you some context at the risk of oversimplifying it through the lens of technical analysis, so you can kind of get your head around this. So let's have a look. Very simply, and let me get the camera right. Very simply, if you look at Apple right now, you will see that we are dealing with a stock that is more or less, sorry about the camera moving here, that is more or less right at its 200-day moving average. That's this red line on your screen. Now, if we zoom in a little bit closer, what you'll see is that right here, this area, pretty technically speaking, around the 190 area, maybe 190.95, something like that, actually also has historical significance back here. So there's also horizontal support here, including that 200-day moving average. Now, what's interesting here, and again, this is at the risk of oversimplifying it, we have already twice this year, 2018, broken below the 200-day, sort of given it this breakdown fake-out move, and then we were off to the races. So to me, I'm not really interested in shorting Apple here on a sell-off. If anything, I'd be looking to sell the stock again once it bounces. But really, more importantly, to be really honest with you, right now, I'm more looking to see if we might be able to get a washout and then a move back higher. But a lot of this really also has to do with the broader market. So if we quickly go back into the market rover, one of the signals that we have continued to receive over the past few days is that more and more stocks are getting oversold. So if you look at overbought, excuse me. So if you look at Apple, for example, we actually, the market rover actually did give us a sell signal right near the top in May, and then we had a marginal higher high, but that really didn't even really count. Some small buy signals here for trades. And so what we're seeing is a lot more stocks really give us bearish reversals. So for example, just to revisit a stock that I mentioned here just 2 days ago, that sell signal we talked about in ExxonMobil. Let me make this a little bit larger so you guys can see. The latest sell signal that we had here was just a couple days ago. We talked about there being 3 sell signals. We had a confirmed one here, and a confirmed one here, and a confirmed one here, and the stock is so far going lower. And we're getting more and more. For example, UPS is the same situation. We just got a sell signal actually just today on this. So you can see there's a lot more, and this is a confirmed sell signal. In other words, it's actually seen follow through selling. So to me, unless the broader market gives us a bit more of a washout and then a bounce, I don't think Apple is something that necessarily can be bought here just yet. And really the same thing is also for something like Goldman Sachs, which I think at the risk of making this video too long, I'm not going to go into. But again, I think it's important to be somewhat cautious here. I wouldn't just blindly buy the dip in Apple. What you want to see is some sort of a washout from a trading perspective. This is a trading perspective here on Apple, not a long-term investment case. I do think the longer term the stock's still okay. But again, there too you want to see that you don't pay any price for it. You would be better off buying it at a discount. And I think from a trading perspective, the same thing holds true, except there you really want to see some real emotional washout happening. And I suspect we're getting close, but I haven't seen it yet. So those are some levels to watch. We talked about Apple, what is it, 190 or something like that. Between, yeah, the area of support really is around, it's really a layer of between as low as 180 to 195. It's a big layer, but anywhere within that area, any sort of strong bullish reversal would be interesting. And again, you know, for us, the market rover is really kind of what gives us a lot of these clues. I hope this is helpful. If you guys have any questions or comments, or if you like the video, leave a comment down below, give us a thumbs up, like, and I'll see you guys soon.